Hi guys. Welcome to my channel. Before we get started, make sure to hit that like button. Also subscribe to my channel. The fundamentals of banking. So make sure to watch the full video. What is a bank? A bank is a monetary foundation that is authorized to acknowledge checking and reserve fund stores and make credits. Banks additionally offer related types of assistance, for example, individual retirement accounts, IRAs, authentications of store, compact discs, cash trade, and safe store boxes. There are a few sorts of banks including retail banks, business or corporate banks, and speculation banks. In the US, banks are directed by the public government and by the singular states. Banking essentials allude to the ideas and standards connecting with the act of banking. Banking is an industry that arrangements with credit offices, capacity for money, speculations, and other monetary exchanges. The financial business is one of the critical drivers of most economies since it channels assets to borrowers with useful speculations. Banks play out a bunch of capabilities, including stores and withdrawals, money trade, forex exchanging, and abundance the executives. In like manner, they go probably as an association among financial backers and borrowers, and they use the resources kept by their clients to give credit workplaces to people who need to get. Banks bring in cash by charging a financing cost on credits, where they benefit by charging a higher loan fee than the financing cost they pay on client stores. Notwithstanding, they should consent to the guidelines set by the national bank or public government. Banking essentials, how the banking industry works. In the US, banks are managed by the central bank. Banks should hold no less than 10% of each store close by, however can loan out the other 90% as credits. The SAFE prerequisite applies to a wide range of banks that are authorized to work in the US, and they can hold the hold as a store in the nearby taken care of bank or as money in the vault. The genuine hold not set in stone by the central bank leading group of lead representatives. At the point when the Fed lessens the hold necessity for part banks, it is carrying out an expansionary financial arrangement, which builds how much cash in the economy. Then again, when it builds the hold prerequisite, carrying out a contractionary money-related strategy decreases liquidity. All the Federal Reserve's part banks should be protected with the Government Store Protection Organization, Federal Deposit Insurance Corporation. The Federal Deposit Insurance Corporation was made in 1933 after the economic crisis of the early 20s through the authorization of the Glass-Steagall Act. It came after different bank disappointments that brought about financial frenzies, with contributors requesting every one of their stores held at the bank. The Federal Deposit Insurance Corporation was shaped to forestall such events by safeguarding all stores that clients keep at the bank. It protects investment accounts, financial records, and other store accounts. During the 2008 worldwide monetary emergency, the Federal Deposit Insurance Corporation raised as far as possible to $250,000 per record to shield contributors from the emergency. For a more profound comprehension of the financial business and its operations, see First Experience with Banking course. Banking fundamentals, types of banking. The normal kinds of ledgers include: Number 1. Saving account. An investment account is a ledger that a client can store cash in that they don't require immediately, however that is accessible for withdrawal at whatever point required. Number 2. Checking account. A financial records permits clients to get to their saved assets effortlessly, and they can utilize it to make their monetary exchanges like taking care of bills. A client can get to the resources by creating a check, using a charge card to take out money or make portions, or by setting up customized moves to another record. Number 3. Certificate of deposit. A testament of store is a financial balance that holds a decent measure of cash for a characterized time frame like a half year, 1 year, 2 years, and so on. It pays a decent financing cost on the sum held. Banking fundamentals, types of banks. The following are the most widely recognized kinds of banks in the US. Number 1. Business banks. Business banks are the most well-known kind of bank. They offer different types of assistance, for example, giving business credits, tolerating stores, and offering fundamental venture items to the two people and confidential organizations. Business banks likewise offer other monetary administrations, for example, worldwide exchange administrations, dealer administrations, protection items, retirement items, and depository administrations. They bring in cash by giving business advances to individual and corporate borrowers and procuring revenue pay from them, and furthermore by charging administration expenses. Number 2. Credit associations. A credit association is a kind of bank that is available to a particular class of individuals who are qualified for participation. It is part claimed and is worked by the individuals based on individuals helping individuals. Customarily, credit associations served either inhabitants of a nearby local area, individuals from a congregation, workers of a particular organization or school, and so on. The possession construction of credit associations permits them to offer more customized and cheaper financial administrations to their individuals. Because of their little working size, credit associations might pay higher financing costs than banks, and clients can fabricate a superior relationship with the financial staff. On the disadvantage, the credit association's activities are restricted, and the client's stores are less available. How would I realize my cash is protected in a bank? The Government Store Protection Organization, Federal Deposit Insurance Corporation, is an autonomous office made by Congress to keep up with steadiness and public trust in the U.S. monetary framework. The Federal Deposit Insurance Corporation oversees and looks at banks to guarantee that the cash they handle is protected. Besides, it guarantees your cash. The protection greatest is $250,000 per contributor, per safeguarded bank, for each record possession class. You don't need to buy this protection. In the event that you open a store in a Federal Deposit Insurance Corporation, safeguarded bank, you are naturally covered. The organization's bank find site can assist you with distinguishing Federal Deposit Insurance Corporation, safeguarded banks and branches. Are any non-ledgers protected? The mission of the Protections Financial Backer Security Partnership, SIPC, is to recuperate money and protections in the occasion a part financier firm fizzles. SIPC is a charitable enterprise that Congress made in 1970. SIPC safeguards the clients of all enrolled financier firms in the U.S. This applies to stocks and bonds, protections, and money that a business firm holds. Financier firms seldom fizzle or close unexpectedly, yet assuming this happens, the SIPC helps close the firm through liquidation and lays out claims processes by which it can safeguard the financial backer. SIPC safeguards your record for up to $500,000 in protections. This incorporates a restriction of $250,000 in real money in your record. This connection will show you a rundown of all enrolled SIPC individuals. Would it be a good idea for me to pick a retail bank, credit association, or business bank? You ought to consider whether you need to keep both business and individual records at a similar bank, or whether you need them at discrete banks. A retail bank, which has essential financial administrations for clients, is the most fitting for ordinary banking. You can pick a conventional bank, which has an actual structure, or an internet-based bank in the event that you don't need or have to genuinely visit a bank office. You should seriously mull over a credit association, which is a not-for-profit establishment and is accessible to serve the requirements of individuals with a typical boss, workers' guild, or expert interest. What different elements go into picking a bank? Bank size is another thought. Enormous retail banks are much of the time notable, huge name banks and have areas all through the U.S., which is helpful on the off chance that you travel frequently for work or getaway. You would have simpler admittance to your assets when you're away and might have the option to stay away from unfamiliar ATM charges. If not, you could find that a more modest bank would offer more customized client support and the items you like. A people group bank, for instance, takes stores and loans locally, which could offer a more customized financial relationship. Pick a helpful area in the event that you are picking a save money with a physical area. On the off chance that you have a monetary crisis, you would rather not need to make a trip a significant distance to get cash. Check whether the bank you are picking offers different administrations, for example, visas, credits, and safe store boxes. A few banks likewise offer cell phone applications, which can be valuable. Check the expenses related with the records you need to open. Banks charge revenue on advances as well as month-to-month upkeep expenses, overdraft charges, and wire move charges. A few huge banks are moving to end overdraft charges in 2022, so that could be a significant thought. Conclusion. At any rate, a bank is where you stash your money until you use it to cover the bills or pull out cash. It can likewise be where you get a credit to purchase a vehicle or a home loan to purchase a house. On the off chance that you're maintaining a private venture, it very well might be where you go to get cash to extend or get to the next level. Prior to picking a bank, you ought to make an examination of the different expenses and accuses that happen to your records or any credits you could require. A touch of exploration and examination will guarantee you find an ideal choice for protecting your cash, laying out credit, making installments, applying for advances, getting assets, and setting aside cash for future necessities like retirement, crises, and home buying. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go.